Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Today is Friday, January 30th, 2026. Ron Quaranta here with my amazing friend and co-host David Brill. I think Josh is working on technical details. Hopefully she'll join us soon. Thank you, everyone who joined us on LinkedIn Live. Thank you, everyone on X who's watching as well. Before we begin, David, our usual disclaimers, obviously. Please keep in mind that nothing we're discussing is any type of advice whatsoever. And the things we're really talking about are our own personal opinions, not necessarily the opinions of our respective firms. David, from the 2-acre beachfront compound in Florida, you're probably unaware. I did text you this morning. I woke up to 4 degrees Fahrenheit in the Central Jersey compound. How are things down Florida way?
It's a little chilly here compared to normal, but I'm not going to complain with it being in the 60s. It is supposed to get a little cooler this weekend. I'm actually headed to Nashville where it's supposed to be in the 20s and 30s, so have to see about that. But
are you prepared for 20s and 30s?
I actually need to get a jacket out of storage because I intentionally put all the warm stuff in storage, but it's fine. But I'm not going to complain compared to what everybody's dealing with in up north. But I would say it's pretty business as usual.
Yep. Welcoming Josh Klayman to the show. Hey, Josh, how are you?
Hey, I'm great. How are you? It's great to see you guys.
Nice to see you guys living the 4-degree Fahrenheit dream every morning in central New Jersey. David, Josh, there's a lot of news to cover. Josh, I'm going to come to you first. I have to do it. I'm sorry. But there was some news from both the SEC and from Capitol Hill, but the SEC put something forward very recently on tokenized securities. I have not read it yet, but I would love your perspectives on what the SEC talks about when they talk about tokenized equities.
So, I think this is a really important topic. Actually, before we go into the SEC, can I just give some background about something?
Go for it.
Okay, so in discussions with clients, don't worry, nothing privileged, but others, financial institutions, large asset managers, others, digital native folks, random people. One of the big questions.
People on the street.
Yes, exactly. Maybe not, but it's getting there. But one of the things that comes up is when you talk about tokenized securities, like what even are we talking about here?
Yeah.
So we've talked about this a little bit on our prior calls, and I think it bears repeating. Some of what, actually, I'll lead into this hopefully in an elegant way. When we say like what is even happening here is one of the big questions that often comes up is, do you actually own an equity interest, right? If you have a tokenized equity, or do you just have some sort of price tracking?
Yep.
Is this tokenized thing that you have, did someone purchase a swath or a number of equity interests that correspond to this? Or are we just talking, some other thing? And when we say tokenized securities, could that even mean certain ICO type things? So what the SEC did was it clarified rules for tokenized stocks and tightened scrutiny on what's called synthetic equity. So basically, for true tokenized ownership of stock, the SEC made clear that issuer approval would be required, and basically was making clear that many tokens for stock that are being sold in the market, that they only offer indirect exposure or synthetic exposure. And there's a great article on this on CoinDesk right now by Sam Reynolds. I think that this is super important. I also would just notice, I also would note that, to the extent you do have tokenized true equity, you also need to look at the state statutes and the organizational documents of the issuer to make sure you can do this. So that's what I would say at a high level. I think this is something that has come up a lot just in practice, where people say, hey, what is such and such doing? I hear they're selling tokenized stock. And then when you delve deeper, there may be FAQs or other things on the website that say like, this is actually, we are not actually selling you equity in the entity.
Yeah.
So I think this is an important clarification.
Josh, thanks for that. And David, to that point, we've had this conversation on legal working groups. We've had this conversation on our tokenization working group. David, I guess the question becomes, the takeaway in a lot of the media about it is if it was a security before, it's a security once tokenized. David, it's not so simple. It's not as simple a question as, are you talking about a digital twin of an equity, correct? Because they're not issued on a blockchain per se.
Well, yeah, I mean, look, we have to remember that when you think about equities, what's the value of the equity? It's one of 1,000 or whatever has been, authorized, issued, and is actively trading. So when you're creating these synthetic equities, they have to either be on a ledger and be counted for, or they're just synthetic.
Mm-hmm.
And so one of the things I would wonder is, and maybe Josh knows this, is, my view would be that a synthetic tokenized, equity of a stock, that's trading, I don't think that would be getting like the dividend that goes along with it. I don't think they could vote on, corporate matters. So I think it's really, a synthetic marker almost to trade in something and get the volatility in a certain stock without the benefits.
Yeah. So Josh, go ahead.
I was just going to say, one of the big things that comes up is like, okay, well, why is there this lack of, I don't want to say lack of clarity because that's like bleeding in from other things, but like, why is it so hard sometimes? Yeah. And is it intentional sometimes that it's so hard to tell exactly what you might be buying, right? Like if the issuer doesn't even know that this token exists, right? Yeah. And you think that you are holding equity in the issuer, that's an informational mismatch. Right. And that is something where, we have a disclosure regime. And I just think these things are very important. And I'm frankly really glad that the SEC has issued this guidance, because I'm telling you, like day to day, probably for you guys as well, this comes up in conversation
every day.
Yeah.
We were at happy hour in New York City yesterday, Josh, and it came up through happy hour. David, Josh, to that point, though, David, you raised something a bit earlier, and we had this conversation earlier this week with a bunch of WSBA members. It implicates a lot of different components in the issuance world. I mean, we're talking about transfer agents, we're talking about corporate actions, we're talking about dividends. I guess the question becomes, David, is that legacy ecosystem prepared for tokenized equities, or does more work need to be done? Well,
I think more work needs to be done. And in one instance, it's, how do you harmonize if you're going to have tokenized equities trading? Yeah. You're going to have one ledger for DTCC, and then you're going to have another ledger at another, a transfer agent. And, there has to be harmonization of those things and a way to track it. And I do agree, like with the SEC, that the issuers need to know about it. You can't have people selling, shares of stock that the issuer doesn't know about. So I think there's a lot of plumbing that needs to be done. And then I think, people have to understand the use cases. So why do you want to own a tokenized share versus a regular share? And do you want the protections that you get from a DTCC, or do you not need those protections? I think there's a lot of things that need to be worked through. I do think that it does make for a more efficient market over time if we get to that place. But I don't think a lot of people right now need those tokenized shares. It really is like, what do you intend to do with them?
And Josh,
Ron, like if you want to borrow against your shares, like maybe the world will evolve quickly to the point where having tokenized shares allows you to borrow against them. Maybe you can post it in DeFi and things like that. But I think that all needs to get fleshed out in more detail.
Yeah. And Josh, just building on what David mentioned, what is that benefit outside of the fact that people keep running around saying, well, you can, if it's tokenized, you can trade it 24/7. What else is there right now in the absence of that structure?
I mean, are we talking about the ones that are synthetic? I'm just going to call them synthetic. Yeah. I think, I mean, part of, well, this is, okay, all caveats apply. I know we have the disclaimer, but this is just my thought generally. Yep. A lot of times people may, may say, well, actually, let me back up further. And this is not the case. I'm not saying that this is the case for all of the types of platforms that offer this. Right?
Yep.
We all can name numerous examples. And over time, there has been increasing clarity on the websites and otherwise about what exactly has been offered. Because I remember searching back, like at the time of Bitcoin Las Vegas. And even as between then and now, I remember being asked by an Asian client about a particular platform and a particular type of tokenization. And not being able to find the right answer. And I recently went back and checked, and I'm like, oh, FAQ is very clear. But I do think part of it is that, as you guys have made clear, we're not having the best alt season, right? And I think people, or we haven't been, maybe that will change. And yes, some people are interested in holding Bitcoin, ETH, certainly other tokens out there. But I think a lot of people still in the mainstream, they're more comfortable saying, hey, I've got this stock, right? And so I think there is an attractiveness to saying, look, I'm purchasing, an interest that relates to this company somehow, as opposed to I'm purchasing a token that is relating to this blockchain ecosystem or something like that. But again, I'm not sure how much. Like I said, I am very happy about this SEC clarification because literally it's something where I've been telling, large banks and others, when someone talks to you about tokenized security platform, right? Tokenized equity, tokenized bonds, that should be the beginning of the inquiry, right? Because then you also have to get into questions like, okay, now this is probably beyond the scope of our show, but is this a bearer instrument? Is this a mirror record? Is this a record?
Really and there's the show.
Yeah. Well, no, I guess our show can be whatever we want, right? But yeah, I mean, these are things like, are there rights stapled to this thing that live in a document, or is it completely dematerialized? Now that goes beyond the question of tokenized stock, right? To all kinds of other things, but it's like an endless, I don't know, I was gonna say an endless sandbag, but like an endless purse. You keep reaching and you find more questions to ask.
Yeah. Josh, to that point, let me just segue for a second. WSBA members coming to the rescue. Chris Brodersen. Josh, can you share the article? Emma was right there with the article link. Thank you, Emma, for tuning in. Josh, David, I want to build on that a little bit because we had this conversation in one of our working groups earlier this week as well. And this might be my ignorance talking, but Josh, looking at what you're discussing there, when we talk about leveraging blockchain and tokenization for particular securities, there was this ongoing conversation around, well, what happens if those kind of diverge, David? Could you have securities priced on Reg NMS and you can see the quote, but they are quoted or they exist at a different value or price on different platforms? And how do markets respond to that? And more importantly, how would regulators respond to that? Arbitrage jokes aside.
Well, that's where I was leaning into the arbitrage. Look, I mean, it's something that has to get sorted out. But in fairness, you do have pre-market trading and things moving after hours. So this could be just an extension of after hours moves. Once the heavy liquidity comes in, then it will normalize the price to where where the market makers and where the public thinks it should trade. When I say the public, where the bid ask is. So I think it would normalize over time, but there would definitely be arbitrage possibilities. I mean, look, I think the best way to do this is to do these on maybe, stocks that have maybe a smaller float at first, just to make sure you can see how it works. In one sense, I mean, a bigger float is good in the sense that you might not be able to move the price, but if you start seeing a lot of trading in tandem, we just need to make sure our systems are aligned so that, there isn't any double issuance of shares. And, there is a good way of tracking the price. I do think that's an issue too.
Yeah, no, David, I totally get it. David, Josh, while we're on this topic of what's going on in DC, shout out to so many of our colleagues, Jason Brett and Adam Goldberg and Dina Ellis, that focus on some of our policy stuff. And I think Josh had to step away for a split second. But David, The other news that came out of DC was the market structure bill came out of committee strictly along party line votes. And I think Josh is having a cat allergy attack or something. But David, do you want to talk a little bit about that? And I guess the question becomes, as much as we try to avoid politics, here we are again, talking the politics of how will Republicans and Democrats move forward with market structure legislation. David, what did you think when you saw that?
Look, I think it's important to move forward. I do wish, for the sake of it getting to President Trump's desk, that it was on a bipartisan basis, but it wasn't.
Yeah.
I mean, I think we have a few issues that at some point decision makers have to get into a room and figure out. I think the most important one, I'm going to put it in two buckets.
Mm-hmm.
I think for the real part of clarity, it's like DeFi definitions. And I think what's really important is deciding at what point, is a DeFi front end, do people need to do certain activities like KYC and AML, or should they do KYC, AML just using a DeFi front end? So I think that area we need to reach some conclusion on it.
Yeah.
My personal view, and again, all our views here are personal views and not of our companies, is that I think when you're doing peer-to-peer that you shouldn't have to, do, like, who are you who would you be giving your KYC to? Like, I would prefer not to see DeFi platforms, suddenly be treated like centralized exchange platforms.
But to that point, David, you could argue that there are some folks, particularly in DC, that would say, well, where are the, and I'm going to loosely use the phrase, investor protections in that concept?
Yeah, I mean, look, I think if you're trading peer-to-peer, whatever investor protections need to exist would really need to exist on the execution side, so that you are agreeing in this peer-to-peer marketplace to pay $5 or let's say $1.75 for an XRP token.
Yeah.
That there's execution and delivery, that the person who sells the tokens receives the money for it, and the person who sells the crypto receives a crypto. Like, that exchange takes place. I think the investor protection needs to happen, with regards to the execution on the peer-to-peer platform, and not on regulating the peers that are involved in that platform.
Yeah. Let me stop for a brief moment. Josh, Emma is on fire with the link. So Emma, thank you so much for sharing those. Josh, I get David's point on the DeFi and peer-to-peer stuff. Weigh in on this. What were your thoughts about this kind of party line vote out of committee, and where do you think it goes from here?
I mean, I agree with David. It would have been better to get something on a bipartisan basis. But, getting something out of committee at all, I feel like is a big step. I feel like it, especially given what happened in the past week, right, with the 11th hour actually, I shouldn't call it that, but with the changes in support to certain markups. And certainly we've seen comments from banks and others that, including at the highest levels, that the discussions are still continuing in connection with market structure. But yeah, I mean, I think it's a positive sign that we have something that passed out of committee, because if you go back a week, or I'm not exactly sure how many days it was, but there was a point at which, there was a question about whether the deal was off, so to speak, at all. Yeah. And also just thinking back to when we had our friend Adam on the show, my recollection is that he was kind of giving some odds. Now, this may have come from a different discussion with him and may not necessarily have happened on our show, but I recall him saying, the idea is, if we can't even get a vote out of committee, then, nothing happens. And then even if we can, there are some hurdles to being able to get a bill passed on the Senate floor.
Yeah.
Listen, I feel like any step forward is progress. And, I do think it's interesting, though, that what was that what went through was more, I think, narrowly tailored and focused on digital commodity intermediaries, right? Because that does go to some of what we've been discussing as well about, could we get a skinny down version that maybe doesn't hit on so many hot button topics?
Yeah. So Josh, as a follow-on to that, we can't avoid the conversation, David, about SEC and CFTC. They've gotten some joint task force work undergoing. We've got Selig there at CFTC. I think I saw recently that Chair Atkins over at SEC had noted that in the absence of market structure, and Josh would love you to both weigh in here as well, they'll move forward on their regulatory powers to give as much structure to these marketplaces as they can. So Josh, I'm with you, and it all seems to reflect progress. David, I'm just going to go macro on you. So what the hell is happening with Bitcoin's price?
Well, one thing I want to say is that I don't think, barring the bill dying, that there's been a real correlation between the progress that we've seen in Congress and the price of crypto. Like, I think that they have been totally not intertwined, and I don't think the ups and downs in this bill, process is affecting the price. I think unfortunately, the metals and prediction markets have taken a lot of the liquidity out of our markets, and particularly with the altcoins. I think that there was a certain faction of people who were buying altcoins for appreciation and not necessarily about the projects, and we're looking for fast money, and that fast money is now in metals and prediction markets. So I think that's one area. I think there's a theme we talk about until we start seeing these different token projects on apps on our phones and actually interacting with them on a regular basis. That also, I think, stymies the growth of the altcoin market. And I think the other thing is valuation. It's still hard to value a lot of the altcoins. And I think the ones that have more transparency about, we have this many tokens out in the wild, we're not going to be issuing more. Anything that people can give quantity on sort of the bottom half of the fraction, the X on how many outstanding there are, that will be helpful, because then you'll know you own one of X instead of one of X plus X squared or whatever more they want to issue. So I think that's, the bigger theme, but we're definitely, we're not correlated right now with metals or the market. And, it's tough sledding for alts right now on a price basis, even though, like, from a building perspective, many of these quality altcoins are far ahead of where they were 1 or 2 years ago when their price was, 1 to 5x where it is. So it's one of these strange dynamics where the projects are building, there's actually more functionality, but the price has been going down because liquidity is moving elsewhere.
Yep. Josh, did you catch that? It's tough sledding from the guy living on the beachfront compound in Florida. Did you
I did hear that. I did.
Josh, go ahead.
You guys are quick today. I was trying to just sort of slip those in, but you guys are on it.
So I was wondering, guys, like, where in this, if at all, fits in the Fed's rate decision from this week?
Interesting. So David and I were talking about that in the virtual green room earlier, Josh, and we've got the Fed standing.
You have a thesis?
Well, I mean, I think, in days past, a Fed rate decision not to cut to that point would have been net negative. I think we're kind of in a net negative trough for a lot of the crypto regardless. I almost would have imagined, David, at some point in the past where the Fed said, we're not cutting rates, it's risk on for a lot of people, that would have made Bitcoin fall out of the bed. My argument is it's already out of the bed. So I don't know. I'm almost impressed by how much it was able to hold on at 83.1, David, in the wake of no Fed cut.
Yeah, and look, we started the year at 88.
Right.
So it's not like we've had this, amazing move downward. I think it's the altcoins that have really gotten hit harder.
Yeah.
Look, we talked about this before. I think we share the sentiment that the core inflation rate should be 3% and not 2%. And based on the numbers today, we're at 3%. And so I think that the numbers today were worse than people were expecting. Inflation is sticky. And, I just don't know that 2% is realistic anymore.
But not sticky across the board, David. It is very segmented. When you look at
Yes.
PPI, the estimate was 0.2%. It was actually 0.5, which is a 3% annualized. But I got to push back on that a little bit, David. When you look at some of the other stats that are derived from greater data sets, I'm thinking Trueflation, shout out to them. They are not members. We don't work with them, but they have some really interesting data sets that inflation is sub 2%. I'm going to ask a really loaded question for both of you. Who do we believe?
I like the methodology that Trueflation uses,
Yeah.
but ultimately the market is not trading on their methodology right now, and hopefully it does at some point, or migrates a combination. But I think people are viewing it higher, and I think one of the other things that's interesting is that the goods aren't necessarily more expensive. It's that services being provided around the goods are more expensive, which is another interesting nugget. So I think, and I think there's a little bit of tariff in play as far as people are not sure what the tariffs that exist in the moment, are they going to change or not? But ultimately it is a little stickier, and oil's back at 65. So I think, right now the idea of a rate cut in March is pretty much off the table.
Agreed. Josh, when the Klayman family office calls you for the Monday morning meeting, do you see it the same way?
I mean, if I'm being as transparent as possible about this, I haven't been following the methodology of Trueflation. So I just want to be like,
Fair.
Now it's another thing for me to look up. But I just, for those listening at home, I never want to, pretend I'm clued in on something. But what about you, Ron? What do you think about that?
I'm sort of in the David camp. I want to believe that there are better data sources. David, you and I and Josh have spoken about this for years. That things like unemployment data and inflation data are just kind of clunky. They're not efficient. They're really de minimis subsets of the overall, 20-something $20 trillion economy. But that's what we've got to work with. And the more you get settled into that, the more you realize they'll act on 3% inflation. And David, I'm going to say it. They're never going to call the terminal rate 3%. They're just not going to. They'll keep aiming for 2% and they'll never get there, in my opinion.
I mean, I think at this point it should be 3%. I think that's more realistic. And
listen, when you and I meet with the Fed.
I mean, look, clearly they're very smart people who have divergent views on this, and but it just feels like to me that's a new normal.
So David, Josh, that segues us into something I never thought we'd talk about. I'm old enough to remember there was a time the three of us could walk down the street and grab a random person and say, hey, who's the chair of the Federal Reserve? And they'd have no idea who or what we were talking about. Everyone seems to know now. And this morning we got an announcement about the proposed nomination for a new Fed chair. There's a process behind that, including Senate confirmation. David, I'm almost surprised at least how the crypto market responded to that. I don't know Kevin Warsh at all. No, he was a former Fed governor. He comes out of private financial markets. David, is any of this relevant for the crypto ecosystem?
I mean, look, I think people who understand the crypto markets and the role that they can play, I think that's really important. Okay. And then, look, there's a famous expression like, everybody thinks they can take a punch until they get hit in the head. I paraphrased Mike Tyson's, one of my favorite ones.
Everyone's got a plan until they get punched.
Everybody's got a plan until you get punched in the face.
Yep.
Everybody's got a history until they step into the shoes, and then they're sitting in the office. So I think, you have to wait and see and look at what the person's views are, when they take the position, if they're confirmed. So I think it's good that he is aware of the role that crypto can play. And, I heard one interesting commentary that, the crypto markets can be a little bit of a check and balance on fiat, which I think is sort of an interesting concept and something we've talked about. So look, I think that the markets seem to be happy with this, and the crypto markets haven't, fallen out of bed over it. So I think people are more focused on the data right now. And I think that, one other thing I want to mention, and obviously we don't want any geopolitical activities to go on. I think there's a very strong likelihood something's going to happen in the Middle East. And the last time that happened, we saw, a significant downturn in the market. So it's another weekend coming up. It could be one of these, something happens over the weekend and then we see a big move over the weekend. So I think people are like, I think on the traditional side, people want to be out of positions for this weekend.
Yeah.
They want to close out positions. And I think in crypto, to some extent, maybe people are feeling the same way.
Yep. That's not investment advice, as everyone always hears us say, David. And you brought up something really interesting. I want to dive into it a little bit. But Josh, I'm sorry, did you have something to add?
Oh, I was just going to say, it was reported, although I didn't hear it directly, but it was reported that Chairman Powell had given some advice for his successor not to be involved in elected politics, which I thought was rather interesting. And just a little bit about Kevin Warsh. I understand that he was a former Fed governor.
Yep.
And I also, I've been hearing just from various pockets and in the media that some people believe that he's kind of bearish on crypto. What do you guys think?
I mean, so I've read some of those articles as well. And again, full disclosure, I don't know the proposed new chairman of the Fed. I just know what's publicly available. He was, if I recall, was relatively hawkish, David, as a Fed governor.
Yep.
But look, you leave those roles after several years. You take 5 or 10 years in a different field in financial markets. It informs your decision. So I don't know that he's necessarily negative on crypto broadly, but I just don't think he'll be a dovish, let's cut rates no matter what.
I think that some of his, look, I haven't done a deep dive on it, but I think some of his commentary has sort of shifted from being hawkish to maybe moderate and maybe a little dovish, but maybe we'll say in the middle. So again, like I said before, I think we need to see what his philosophy is when he gets into the chair and let that guide us.
Yep.
But I do think that the numbers are guiding us that we're not going to see a rate cut in March.
I want to point out for a brief second that Josh is in competition with Emma. She's throwing links at us fast and furious. I can't even read them fast enough, but Josh, thank you. I will review later. Josh, go ahead.
Well, no, one interesting thing is, even though I've seen that reported, what I've mentioned about, and I put in a link to David and Ron, it would be an interesting choice for President Trump, who is so out front on crypto, if he were to appoint somebody who were not enthusiastic or at least even on crypto. So I guess, like you said, we'll see what happens when a person is in the actual seat. What I would say also is that, I need to get used to using the terms hawkish, dovish, and when to use bearish as opposed to either of these, because
you took to risk on, risk off. I'm sure it'll be no problem, Josh. Josh, David, we've only got a few minutes, and thank you for everyone who joined us on LinkedIn Live and on X. If you've got additional questions or comments for David or Josh, please let us know. David, I'm going to rip up the script. It's something we didn't get a chance to talk about, but I think we've all keenly seen in the news. You've been talking about gold. We're starting to see some pretty large players in the space buy gold. I'm thinking about the recent news on Tether, for example. David, what's it is a smart move, I guess. What's the long play there in your mind?
Well, look, I think diversifying makes a lot of sense.
Yeah.
Tether, by their own reports, are printing cash, and lots of it. And I think they're, again, not having involvement, on how they're allocating their resources. But it makes sense to, allocate it in different places. And, gold being one of the places to allocate it to, they're looking pretty smart because they've been buying it for a while and it's run up quite a bit. So I think that makes sense. I think they need to own things that are liquid. I know this is their excess capital that they have, but no, I think it's a prudent move.
David, is this a contrary signal on things like treasury purchases for the large stablecoin providers?
I don't think so, because I think all the assets that are backing the stable coins have to be in very liquid assets. So I don't think owning hard physical gold as liquid as they need to be, because you'd actually have to deliver that gold.
Yeah, it's not a tell on treasuries particularly.
No, but I think it makes sense to diversify.
Yeah.
You're talking about a lot of money, that they have now, and I think it's prudent. I don't think it's anything against owning treasuries or something else. I think it's just you reach critical mass and you want to have, different asset classes.
Yep. Understood. Josh, you've got the gold bars stored somewhere, right? What's your take on the gold move?
I mean, I have certain clients who are very gold is very important to their business model. So I'm excited for them about some of these moves. I do think, I don't know. I don't know. You guys watch these other prices so much more than I do, I have to say.
For the audience, we drive Josh crazy.
I love it. It's just like, if you're looking for unique insights from me about these things, like,
David, did you notice?
Buyer beware.
He avoided the gold bar comment, though. I will point that out.
Yeah. We know Josh likes she likes her bling. We know, Josh is long gold and diamonds. We know that.
Long gold and diamonds.
Exactly.
Well, David, Josh, we're just about out of time. Lots of stuff to talk about. We'll all be sharing the text messages over the weekend. For everyone who's watching, thank you so much for tuning in. If you didn't get a chance to ask your question, info@wsba.co. Josh, David, we've got a lot going on at WSBA. We're getting ready to submit our FDIC commentary on the proposed rulemaking, working with the one and only Emma Channing on also contributions to UK stablecoin proposed draft legislation. We're hoping to have that done next week. Josh, I'm going to put it out there. We're scheduling a quantum webinar sometime early in February. And for those of you who don't already know that David and Josh are polymaths, Josh has already forgotten more about quantum computing than I'll ever know. Josh, you're going to be with us on that webinar, hopefully. I'm not sure what that date is. And we're planning our April trip to Washington, D.C. It'll be interesting to see what comes out of the Washington, D.C. between now and then. David, Josh, what are you doing this weekend? One of you's got.
I will be finding some warm coat for that trip, because shockingly, it's going to be in the 20s and 30s in Nashville. But I actually will be reading the FDIC letter in between having some barbecue and watching the end of the Australian Open. So I think those are like my priorities and work as well.
Josh and I are testing out like new electric snow shovels just to get out of our compounds. He's he's doing barbecue, Josh.
Maybe a flamethrower, Ron.
Aren't those illegal?
Seriously.
I keep seeing that.
One thing I would not recommend if anyone is contemplating this is, if you run out of salt, do not follow advice to use kitty litter. I will say that was given as advice locally for steps and decks and things like that. And I can tell you that on the first floor of my home, I now have a lovely coating of what seems to be like it became liquid, the kitty litter from outside, and like now is like on the floor. So I will be this weekend figuring out a way to remove that. Fortunately, not on like rugs or something, but just on the floor, because it gets all over shoes. Just don't do it. Do not do it. But as for what I'll be doing this weekend, so Ron, when you were talking about like, am I having a cat allergy? Well, no, but I'm overrun with like liquified that then turned into a powder of kitty litter. But for this weekend, apart from this, Emma, it was desperate times.
Emma, you have no idea what the weather was like here in Central Jersey. It was snowpocalypse.
Yes. And, but yeah, so this weekend, some of my kids are in a showing of Shrek Kids, Shrek Junior, the musical. So I have a Fiona, a donkey, and one of the three little pigs. So I will be doing that. They have opening night tonight, and then they have a matinee tomorrow. So that will be that I'm doing other than dodging snowflakes if we end up getting hit. But what about you, Ron? What are you up to?
I'm sorry, Josh. I'm having a hard time getting this image out of my head. David, I just have this image of like every neighborhood cat near the Klayman compound just showing up like at her front porch and just like
So bad.
I just have so many questions about the like. Anyway, I've got a nice bottle of Sauvignon Blanc waiting for me. I will be finishing with the team, the FDIC commentary. Emma, I'll be reaching out to you. Emma and the team have been working with us on UK commentary. Chris Brodersen, it was great to see you at our happy hour last evening in New York City. Hopefully going to be a quiet weekend. I doubt it will be. David, Josh, thank you both so much. David, your usual visage is a little blurred, but it is good to see you both. Have a great weekend, everyone. We will be back next week. Take care.
Thank you.
Bye.
Bye.